The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi, everyone. Basil Chapman, Tiger Technicians Hour on this 5th day of April. My pleasure to be here Monday through Friday. And that is, of course, 11 o'clock until noon Eastern Time. Great program we've had so far. Let's hope I can keep that standard up. And look at the charts we've got here. This is the Dow E-minis down 16 at 4:30 this morning. I sent out my chart on the E-minis to the den. We were somewhere over there, and I said that a number of things are going on. I showed the parameters, left side, right side, price, time match to 2035. And that should take us, if you match everything here, that should take us to about 10 o'clock. And at 10 o'clock, the low was 2036.75. Now there's been a rally attempt, another rally attempt. We're going to watch this real closely. Actually, let me just go step by step. When you're looking at this 120-minute chart, it made a peak F in the Chapman wave at 2071.50. It starts to come down, and it comes down in almost the same time. It hasn't even taken out the left side low. Remember, the aspect of arching or cupping or inverted V or a V-shaped pattern, invariably, the time from the left side to the right side is pretty much the same from the fulcrum high, from the what I call the plumb line high or low, unless there's what I call a crash mode. What would a crash mode be? Let's just jump over here quickly to the 10-minute chart, because I love to show the 10-minute chart. That moved down in a 10-minute chart, going almost straight down at 2:20 this morning, from 2052 down to the low of 2040. That's 100 points in the Dow, 110 points in the Dow, and just over 10 points in the E-mini. That was done very quickly. But you've seen the same sort of thing. Look at the upside here. It went straight up. Look at that move back on the 1st of April at 10 o'clock. Market opens down sharply at 2035 and then just screams to the upside. That's a rocket ship. I've struggled with this for so long, and the only thing I can say, it's a rocket ship. I would love a crash. It crashed just C-R-A-S-H, 5 letters, and it just does the job. There are no more words. You just need to say crash, and you know exactly it's not good. What's on the upside? Enlightenment? What do you say? So as far as I can tell, all we can talk about is this single leg A phenomenon that we've got in the that move that came from the low of 2036.75 at 10 minutes to 10 this morning. And it went almost straight up to 2048. Hey, that's a pretty big move. And then it came down sharply. Now it's testing the 9-period exponential moving average. I'll just make it real simple. At any point today, if there is a break above 2048, then 2050 would be the 200-period exponential moving average. If there is a failure to rally, and the volatility index, which is trading at 1523 right now, up 1.11, if that intensity of selling is maintained and the VIX actually starts to go to the 1550s or higher, you will see us come right back into testing of the lows and break 2035. This is a very important moment because I'm going to go through the charts now and we'll see why. Let's get rid of this 120-minute chart right now. And we'll put this over here, right there, so you can see what you want. So daily chart, weekly chart, monthly chart, 120-minute chart. Here we go. The Dow, INDU. One of the reasons why we went short at the end of last week is because I'm looking at this and I'm saying there are so many factors that I'm looking at that suggests there should be a pullback. I can only call it a pullback at this particular point We'll get into other things as we move along, and I'll explain why. But the stochastic is still at 90%, even though everything started to turn down, and there was a big divergence between, look at this, the Dow, when it made that peak D over there in March, towards the end of March, and then it made peak F, confirmed yesterday, right there. Look, the MACD's turning down. Stochastics at 90%, still very good, but turning down. You've got the on-balance volume. We've got the relative strength. Everything's turning down. That doesn't mean to say you can't get a rogue wave bounce to the upside, but I'm suggesting that now we're getting into the area where my bias is to be looking at the short side, but then you get into other areas that have already been beaten down, like the IBB, the biotechs, or maybe even healthcare, and you can see some kind of support coming in. So let's just do this. The Dow, I'll give you the parameters. A close below today's low. No, a close below the low of the first, Friday. A close below 17,792. We're at 17,660 right now. That's not right. 17,568. I misread that. Couldn't understand what was going on. We're at 17,061 right now, down 75. Well, a close below that Friday low suggests that is a close below the 9-period exponential moving average. It suggests we're coming into very strong resistance, number one. Number two is, if there is a bounce by, today's Tuesday, by Thursday, and you take out 17,811, you've recycled to the upside, and you should continue to the upside for a little while longer. Okay, so that's that. S&P, SPX.X, how much time? Yep, I've got time. S&P is just down below the 9-period moving average right now. It made a peak D on the first at 2,075.07. A close below Friday's low of 2,043.98 would be very negative. And right now it's at 2050.90, down 15. Let's just do them all. QQQ made a peak E. It's sitting on the 9-period moving average, helped by the biotechs, I believe. MACD is not nearly so bad. And stochastic is giving a negative divergence, as is the on-balance volume. But we're talking price, and price is holding well at 109.22. It's down 73 cents. If there's a break, like the others, above 110.43, then it recycles up. If there's a close below Friday's low of 108.39 in the next 2 days, that's very negative. The weekly charts in all of these is just a single leg A or maybe a B to the upside. Nothing yet wrong about it. Therefore, price is going to be the arbiter of the trend, number one. And number two is the day is young. You know, we could see a whopping turnaround here. Let me just show you something real quickly here. This is the SPY, and green is the SPY, and red is the USO. That is the oil contract. And at this particular point, it's not showing very much at all. So I'm suggesting to you that it's going to be a very important hour as we get into 12 o'clock. We'll be talking about a lot of things. So now let me do this. IWM, we spent time on yesterday. It's acting, it's okay, but it really isn't acting as well as it should. It's really struggling to move higher. It's under the 200-period moving average. It's at 109.52, down 67 cents. I would suggest to you that if it closes under 108.20 in the next few days, that's just not a good sign at all. Let me just quickly go through gold. Gold is up 12 at 12.31. We'll talk about that. It's right at the 9-period moving average. We'll talk about crude oil. Crude oil is down 14 cents at 35.57, and the TLT is spiked up to a leg F/B, and we'll do the dollar when I get back.
If you're looking to discover a new financial resource and diversify your financial portfolio, consider the new Market-Safe Commodity Solution CD from Everbank. This 5-year U.S. dollar-denominated CD gives you exposure to 8 equally weighted commodities, including WTI crude oil, gold, silver, copper, nickel, soybeans, corn, and sugar, in one powerful CD. With annual pricing caps of 70% per component, you could earn up to 70% upside payment at maturity if the commodities increase in value across annual pricing dates. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on this indexed CD. Don't miss out. Take advantage of this financial resource designed to grow with the times. The April 14th funding deadline is quickly approaching, so hurry over to everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once again, that's everbank.com/TFNN. This advertisement is sponsored content. Everbank is a member FDIC.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Basil takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Aha! I actually did remember what I closed out with and that I said I'd follow up on after the break. It's the dollar. The dollar got repelled at the 9-period exponential moving average. And that to me is really important because it's saying the same as the commodities, these charts, when you come down, you remember we spoke about this, Sarah had asked me about last week about the dollar, and I said if the dollar closes, my 3 methodologies are in the Chapman wave with the H pattern or inverted V. A close above the left side high bar can bounce and bounce all the way back to the top of the arch, if it can, especially if it can cross any peak on the left side of importance or the 9-period moving average or whatever is in the way. It could go all the way to the top. That would say that if the dollar did not break 94.58, that's regardless of closes. It didn't even get to 94.58 and then rallied, it could go back to 96.40. If the dollar broke underneath but closed above it, that would say there could be a rally to the 9-period moving average at about 95.02, or it could go even higher to 95.30, 95.50, but it's going to come back and retest unless the technicals reverse and give a buy signal to buy mode really quickly. That's number 2. Number 3 is if there is a close below the left side low bar, and within 2 bars, the bar that takes it out, and the very next bar, I've learned over the years, give it 1 more bar. That doesn't matter whether it's a monthly. Remember, we were on air when the dollar broke its 80.80, was it 80.20 or 80.80 low in a monthly chart, and I said, darn, we've just broken that dollar's low, and it's going much lower, which it did. That was a long time ago. So this is going to be very important because the stochastic's only flattening out, and the MACD's trying to turn, but it's really not doing a great job. So far it says that any rally in the dollar shouldn't go more than towards the 95.30 level, maybe 95.60s, and then it should fail. Well, that's giving room for the dollar to move a little higher, but we're looking at the commodities as chart formations. that have had a significant move to the upside, and in the monthly charts, it's a single leg A up. How it comes back down and retests is going to be very important. So gold it's held, excuse me, I don't know why I'm losing my voice there. It's held very well between the inside track, Chapman wave inside track buy zone. It's a little above it. It got repelled to the 9-period moving average. If gold is able to break above that high on the left side of 1246.80, that's going to be very important because it has all those left side highs that it could tackle one after the other, and it's holding the 9-period moving average in the weekly chart. So this is really important. I'm treating gold as a separate entity to the other commodities. Let's go to Mark in Fort Collins. Mark, how are you?
Good. How are you today?
I'm well, thank you.
Good. Hey, just a couple quick questions. One real quick one on the IBB, and then I was wondering if you could also look at the XLP. Do you think the IBB, I'm looking to short that by maybe buying some puts, but I wanted to see if you think that we're going to still make a 120-minute peak D. I was looking at your charts this morning.
Yes, that's a really good question. Now, I spent quite some time on this, and then I did say to subscribers that I would feature it, and then because I was just so busy studying all the different indices and stocks, etc., for our positions this morning, that I forgot to do it, and then I did send it afterwards when a couple of people emailed me to say, "Hey, well, where's your IBB, your iShares Nasdaq Biotech chart?" And I just sent it out. So the reason why we had no position is because I really do like 88% in the stochastic on the daily. The MACD, the moving average convergence divergence, is still rallying. Fund managers tend to rotate through different sectors. When one sector is being really beaten down, we saw that in gold, we've seen that in different areas, then they tend to gravitate to that, and then they fail because the positions fail. And it happens a number of times. And then there's this one moment, and this could be the moment over the last week, where all of a sudden it starts to gather a little bit of momentum to the upside. I say a little bit of momentum, and I mean that because the weekly charts are still not showing very much at all, and the monthly charts are really very poor. But the 120-minute chart does say that I spent some time on this. I decided I'm going to keep it as a peak C. I would not give an alternate count. There was no need to give an alternate count. It had fulfilled everything that it needed to. The MACD was still very strong. So there is room for the IBB to go a little higher above 274.68 for leg D. And look at the way it's acting. The market is down. Dow's down 71. S&P is down 14. Comp index is down 27. And yet you've got the IBB up 107 at 271.72. So here's my thinking. Give it a little room. I could have had here's the other thing. I could have had an alternate count, E/B. I decided there are times where it's absolutely necessary to have the alternate count. In this particular instance, because of the way certain of the biotech stocks have acted, Gilead and some others, I think there's room for this to go a little bit higher, and that could be the reason why the NASDAQ could hold a little bit better, and one of the reasons why we've been very selective in choosing our short positions, only on pullbacks in the vehicles that we wanted to be able to get in. And even then, I didn't go full hog to the short side. And one of the reasons is I'm bipolar right now. I have one side of me that says you have to be looking at the chance of all-time highs. You cannot rule it out. There was so much negativity there. Even Donald Trump came out the other day and spoke about how horrible the stock market is. And I'm saying to myself, wow, that's nothing that he's spoken about before. So it says to me that's giving me room to say, I think we can pull back. And my thesis that I was talking about last Wednesday in my webinar was I think that there's still going to be a pullback. And then when people start to get really negative, we're going to turn around and go back. And that's going to be whether or not we're going to test all-time highs or not. That's number one. Number two is the way I'm looking at it, as long as there's a rotation going on, I like it when you get your Granville sell signal to sell mode that basically says 93 to 98% of stocks are going down regardless. That includes commodities, everything. We haven't had one of those for a long time. So I'm saying to myself, okay, IBB has room to go, and we've seen it today. I don't think the day is done yet. So I'm only saying that there's a chance that it could go to leg C. And then I'm going to look at this as if it's the Chapman wave, talk about the camel hump, that is that the arch formation in the stochastic, which goes to another arch formation, and that's where you get either an E/B or an F/C. And I don't know. I just think there's enough room to make that arch formation that goes to a lowercase m. Let me do this in the weekly chart. So here's my thinking. Have patience. You might miss an opportunity, but as long as fund managers see an out and they can get into something that's holding okay and not breaking down, IBB might be it. So I think have a little patience, and maybe by the end of the week we'll be looking at 277. Just, I raised my buy stop on the long-term short. So let's see how it goes. I'm going to just say, give it a little room. If it starts to fail today, if the IBB closes at 268 or lower, I think you might be able to do it then. But have a little patience, and I'll deal with it in my newsletter.
Can you look at the XLP?
XLP.
Yeah.
Okay, I'll do that. You want to hold on? I'll look at that when you come back.
Hold on. That's fine. Thanks.
Okay. We'll be back, folks.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, folks, we're back. Dow's down 77, S&P's down 40. Mark is still there? I'm not sure if Mark is still there. I couldn't tell if it was in a hold. You are there. Okay, good. Just before we go to the XLP, and this is really, I thank you for bringing it up. over the weekend, I looked at it. I was sure that I was going to be discussing it. And of course, there's so many things going on that I completely forgot. Now, this GMO paper that I'm showing right now, I just want to do this because I'm liable to forget it. This is the little black lines that you see there and the gold lines. The black is, this is the days excluding the FOMC meetings. And now look at the returns, the relative cumulative returns, long Fed days, 0 on all other days. Look at this incredible move from the low of 1980. Look at that. It is unbelievable. It's gone from the 90 level to the 200 and somewhere around 220. That is huge. That's just the returns based on the day of those cumulative terms long on Fed days. So I just wanted to get that. That's on that paper. Let me show you the paper before we move along. And that's a paper, the GMO white paper, the stock market as monetary policy junkie, quantifying the Fed's impact on the S&P 500. James Montier and Philip Pilkington. You can just Google it. It's right there, March 2016. So this is really current. So now let's go to one of the reasons why I've been talking about something tells me that we're still going to have an accelerated move to the upside at some point. I still don't know when it'll be. I'm getting some sense of what I'll be looking at, but if it's this year, I thought it would be this year. Then I thought maybe we're going to extend out to 2017. I've got a political scenario how that could happen. But let's just do one thing at a time. The XLP trading right now, I've got it as an alternate count. I'm calling it a peak D right now, no alternate count. Peak D at made on the 1st of April at 53.77. This is the S&P Consumer Staples Spider Fund. Now look at this. It's pulled back just modestly for 2 days. No big deal after that 1st of April move to the upside was spectacular. One of the biggest moves it's had in a long time. It's had a big move down back in February. But look at this. So now what's happened is that you've got, if I do the vertical lines, you'll see that from that peak G/C to the peak D, look at the difference in the technicals. The technicals were really strong. The stochastic wasn't as strong as it was even at that peak D back in the 26th of Feb. But on the 17th of March, look how strong everything was. And then look what happened. It turned out only the on-balance volume went to a new high, and it A, B, C, D, E, and then it recycles, A, B, C, D, yeah, another D. So it's just like the pattern here, the on-balance volume's done the same thing. And yet the technicals are pulling back. That's one of the reasons why I wanted us to be going short and adding to the shorts this morning, because my sense is that on the short term, that's what we're looking at. Then you look at the weekly chart and you've got a leg E, and the MACD is very strong. The stochastic, oh, by the way, the 87% in the daily stochastic is still good, but it is turning down. But look at 91% and flat in the weekly chart. And now I've got a leg C. I try to count it umpteen ways. It is leg C, just like GE has gone to all-time highs in a monthly buy mode. So you've got the XLP. So now what I'm looking at is, this is Consumer Staples Spider Fund. So I had it and I won't be able to get it. Maybe I can still get it. Do you know offhand what's in the Consumer Staples area?
I can look at it real quick. I was just looking at that for you.
Because I was trying to get it, but I had the GMO white paper on the browser that I wanted to use. So if you can just give me any names. I'm almost sure it's got a Costco. It's got some others.
The top holdings are starting with the highest is Procter & Gamble.
So okay, great, because what I mentioned yesterday in my newsletter was that you've got the fabulous consumer staples that are being like Philip Morris, what did I name? Coca-Cola, McDonald's. Oh, there it is. That's exactly it. So let's do this. Fabulous. This is great. So it made a peak F in the daily in Procter & Gamble in a kind of a sideways choppy move, which means that you've got a lot of strong resistance, but I've got a G/C in the weekly chart, but that can fail because the monthly chart is only at B and way underneath the previous high. So Procter & Gamble has done very nicely. It's starting to struggle. Look at Coca-Cola. I did this the other day. So Coca-Cola has made a peak E if today it doesn't make a new recovery high. But the way the MACD and stochastic are, it's holding really well. and it could be a slow pullback. So I have to just say it's in leg E. It could have recycled. I don't think it's recycled. It's leg E in the weekly, but it's still in leg C in the monthly. So that's looking at, that's the reason why I can't get overly bearish here. Look at AMO, which is Altria Group. This is leg E in the weekly. It's only C in the monthly, and it's actually like a brand new leg A in the daily. I believe I'm going to call it an A for now, but the PM was the other one I was looking at, and that's Philip Morris. Oh, I did Philip Morris. McDonald's. Look at McDonald's. Is McDonald's in it? I don't remember.
McDonald's top 10. It's CVS, Health Corp, Walmart, Pepsi, Walgreens, Costco, Colgate, Palmolive.
So this is saying to me that the consumer is still spending. That's number one. CVS, oh, did I update my CVS chart? Let me just double check. Okay, so that's an instant restart, and then it went to an A. Let me just type this in right now. So it went to an A, a B, a C, and that's a D. Let me just double check because that could have been by a penny. 104.40, 104.40. So this is a leg D with a possible peak D right now, and I've got a couple of indicators suggesting that it could pull back, but it's only leg B in the weekly, but it has made a very long candle, this Chapman Wave Roman candle, in the monthly. Oh, I'm so pleased you brought this to my attention. There are a couple of things that I want to do, other than to say, I believe that on the short term, we're looking at the consumer staples pulling back. I don't have a major sell signal, just the daily could go to a sell signal and then even a sell mode. But the weekly chart, let me go back here. The weekly chart is still really strong at 53.27. You would have to see a move to break the monthly 9-period moving average of 50.90 to really say, oh, maybe you're going to have to do some other kind of count because it's failing at a peak C minus. But in this particular instance, I still see that as being quite strong. So your question pertained just to the analysis, or do you want to do something with it?
Oh, I've got a month out put, a 54 put, and I'm not looking for a ton on it, but it looked like it was ready for at least a little bit of a pullback. So that's kind of where I'm at.
So deal with the daily chart, and I'll just make it really clear. If the XLP, it can take out the high of 53.77 and make an E. But if it really goes to 54.50, I have to think it might even have recycled, because that would be really important. I mean, a point, 2 points from here on the upside would be really impressive. So on the downside, if it closes below the candle of the first, if it closes below 52.77, I think you're looking good, because it's bound to test the low of the 24th at 52.15. That's really what you want to be looking at. And then remind me again to look at it so that we can look at the weekly charts. Thank you for calling, Mark. Great call. Dow's down 89. We'll be right back. Basil Chapman, Target Technicians Hour.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hi folks, question I had about EUFN, never seen that before. This is the iShares Euro Financial ETF. It looks like it's gone to ABC minus, and now it's pulling back. I'm not that happy with the chart pattern. I was asked about Deutsche Bank. Looks the same sort of thing. It made a peak E from the low that it made back in the 1478 area on the 9th of Feb. It ran all the way to 20.70 on the 14th. Made a peak, a doji peak E, and comes all the way back down. It's taken out the left side low of importance of the 24th at 1607. It's trading right now at 1603, down 71 cents. Whoa! The question was about that and Germany. I think, let me just double check. That's DEDOW. I get it. So this imitates the German index, but it isn't. It's the Dow Jones equivalent of the German index. So the pattern should be almost exactly the same. I've got a peak E and a very sharp move to the downside on the daily. The weekly is testing the 200 period exponential moving average. It's under the 9, and the monthly doesn't look very good at all. This does not look good. So what was the question? Deutsche Bank, yep, don't like it. And DAX, could a crash of these affect the S&P? I don't know if it's going to directly affect it, but whatever influences them could be the same influence that we have. Now, I've spoken about this before. There are a lot of people whose work I really do respect, and they're talking about, they're not talking about just a sell-off. They're talking about, that's it. I mean, that is it. We are done with the stock market. I don't see that yet. You just saw the XLP. Maybe I'm wrong, but I think this whole rotational aspect is really important as we assess what's going on. And one of the reasons being, when you are looking at a rotational market, it gives an outlet to those fund managers so they still feel they're doing okay. It's when all of these things come down. I can just tell you that if the VIX index, which is at 1533, if by the end of the day it goes to 1570 or even touches 16, then we're going to see and I love what I'm looking at now in terms of the market for 2 reasons. One is, I love the stealth move where let me just show you this. I wasn't going to, but I'm going to do that now. But let me just do this. This is what I showed subscribers. There was a 50-day rally from the August 24th low to the high of the 3rd of November. at 17,977. There have been so many matches that have been just beautiful. The symmetry in this market has been absolutely outstanding. Look at the symmetry when we broke down, which I only got late, but I did pick it up. When we broke down back in August, you remember then we went tumbling down to the August 24th low. And then I circled here and used this as a kind of a template. Now, one of the reasons why we kept going long, but I didn't just buy and hold, but I kept going along, taking profits. But when we finally went short, we went short a tad earlier, about a day or so. But now look what's happened. You've got 50-day match exactly to the day, to the letter, to the peak F top of the Dow. As I circled it and I showed subscribers, look, we've got a declining move here. So this makes it very hard to break out to new highs. That's all-time highs. It can break to a new recovery high. You can go and start a recount to a leg C and then a D. I just don't see it right now. I think that there's a lot of resistance. That's number one. Number two is I love when these things are all occurring when very few people that I hear either on TV or anywhere are short. Very few people going to this move were short. It was a stealth move. It just happened so quickly. And there were so many false moves to the upside. And then it just kind of stalled that I'm thinking that by the time everyone gets on board, it'll be later today or tomorrow when the Dow is down enough. I want to see a break at close below 17,600. That gives me immediately, at this moment, the 120-minute chart is confirmed as a peak F. I haven't changed it yet because this is what I show my subscribers in the morning. So this will be changed to a peak F. If that's the case, and certainly if we take out the low of 17,568 that was made at 11:30 on the 1st, that'll suggest that not only has the 120-minute chart gone to a sell signal to a sell mode, but the daily, being a peak F, I can very quickly do this. I can give it right here, INDU. I can change it from a plus sign to a down arrow. I'm waiting on that. The day's young. Anything can happen. But you remember what I was going now. And then I just got an email here from Al, who sends me these emails, and he's I don't know how many times he's done it. He manages to pick the exact to the penny almost of certain stocks or indexes, and he either buys it to the bottom at the low or gets it at the top. Very good. Sometimes he misses, but I have to tell you, he gets it more than he doesn't. This morning he types in to say, I bought SPY at 207. Did I do good? I'm suggesting no. Let me just see. 207 is trading at, what, 207? Did you say 207? He must have meant 20. You couldn't have meant 207. Did you mean 207? If no, you couldn't have. 207 is 206.26 is the high. I'm not sure. I bought SPY. I don't know what you mean because that's not the way it is right now. So if you shorted at 207 before the opening, fabulous. Bravo. I don't know what your technique is, Al, but you, as you always say, did I do right? Heart stopping. You tend to do that, but that's your technique, and you managed to do very well. Congratulations. I don't know if you did it, so just correct me. I'd like to know. So here are a couple of other things that are going on. As hedge funds suffer, could there be a big sell-off? Okay. Could there be a big sell-off into end of April, end of quarter for hedge funds? SPX, big sell-off looming. Financial Times, front page today. Worst performance in 2 decades delivers fresh blow to active funds. You see, I think that we're talking apples and oranges here. What the funds are doing and what the market's doing sometimes doesn't quite correlate. Now, let me show you something else here. I'll just grab this again. I showed it a little earlier. Look, I don't know where that big spike is in the S&P over there. I think that was a mistake. It didn't get that high. But look, the green is the SPY, and that is the red is the USO. So sometimes even the correlation between, look, here the price of oil is going down and the S&P spikes up. So you never, these parallels and these comparisons are sometimes great for a while, and then something else comes into place. And that's why I always recommend, whatever technique you have, always try to have backup techniques to follow if you're wrong or to confirm if you're right. it's really important. He has the 10-minute chart. See, it's under the 9-period of moving average of 2041. Let's call it 2042. So that's going to be very important what happens here. I'm really looking at this, and I'm constantly focusing on the IBB, because if the IBB does fail here, and all of a sudden the fund managers are in the wrong thing yet again, that's where we could get the really deep sell-off. So I don't want to start projecting and making this very complicated. Let me just make it as simple as I can. VIX. The VIX index is my benchmark always. The VIX is trading at 1538. It's good. As an indicator right now, up at 129, up 9%. This is nothing. I want to see what happens if the VIX finally is able to break above 1630, 1650, hold in the high 16s. How does this market handle it? How does the areas that have been quite good now, how does gold handle it? That's going to be very important. I'll be right back, I think. Yep, Basil Chapman.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Learn how to trade options with swim lessons. Brought to you by TD Ameritrade. Think or swim. Next on TFNN.
Folks, great options hour. Next up, a swimming lesson. Just Kevin Inks and the gang, just fabulous show. Take a moment. If you've never done options before, it's really it's a fascinating way to be able to, in your own time, take a position and just let it play out. And if it doesn't play out, you can have just the least amount of risk in the market, putting up the least amount of cash possible, and I think it's just a great way to at least participate in the market in ways that are sometimes for some people a little unconventional because they've never done it before. And also, I would suggest listening to these guys. Some of us learned it by the seat of our pants. I remember I was a professional musician, and I remember having to go to a call box on breaks when I had them to be able to put on trades. And can you imagine? You're at a call box. You wait for your broker, and then you say, "I want to buy X, whatever it is, the options or the calls, whatever it is." And then you're in the absolute dark. First of all, you don't even know if you got it at that price. And then you might have got it, and the whole thing could have played out for you within an hour. And there you are working away. And at 6 o'clock or whatever it is, you check and you see, and you find out whether or not you were right or wrong. Usually wrong. But when you're right, you're really right. But it doesn't always make up for the difference. Now you've got so much information that you can glean. You've got the charts. I never had charts like this when I was doing it. So this, it's fantastic. When I started off, I'd taken money that I'd made from the stock market, divvied it up between property and stocks. And then I also went for the first time, into the options market. And, it was a hard lesson, I must say, after having done so well. Thank goodness it was just a portion of what I dedicated. But it was a lesson, for sure. I always say that our education, you go to undergraduate school, then you go to graduate school, then you go for a postdoc for a doctorate in the School of Hard Knocks, and then you take your postgraduate course, and that's the real life thing, and that's when you really learn. It's like people say they have a job, and then when they go out to the real world, within a month they've covered more than they ever thought they'd learn, and they're in the real world. So XOP is the question, and that is the Spider Oil and Gas Exploration. It's on the sideways trajectory. It's got this H pattern. You remember the pattern I call the dreaded H? I already circled it and said my thinking is that we should be coming down towards the 27.45 level or 29.58, having made PD at 31.68. And the question is, how do you think these companies will perform as we move into earnings season? Will there be a final thrust down into earnings for OIH, oil service holders like Rig, Transocean, or is worst expectations factored in and could rally into earnings for oil exploration companies, XOP holders, etc.? I think that we still have work to do. I think that from the charts I'm looking at, there might be one more sell-off to come, and then you might be ready for a pretty decent rally. All I can say is that looking at the XOP, which is the oil and gas, and let me look at the OIH at the same time. Not OIH. OIH before we wrap up here. Yeah, I think you got to be careful. I'd just be real careful. I would suggest to you that probably by Friday or Monday of next week, we'll have a real good feeling whether you can buy these things and that there should be a pop-up into the next earnings period. But I would just be very careful. You've had a nice rally. Now they're consolidating. So as we're about to go to the end of the show and you're going to go for your swimming lesson, now let's look at the VIX once again. The volatility index trading at 1537. If there's a rally by the end of the day, that's fine. But if the fund managers are just not even interested in buying the volatility insurance and it starts to drop to under 15, I'd have to say, you know what? We could see the rally coming up sooner. My thinking here is that we're in a down phase right at this moment. It's going to be shorter than one would think, a little deeper and stronger, and then we'll see whether there's the bounce back. Thanks for being here. Check out my opening call. I think you'll really find it fascinating, especially this is such an important period. Thanks for being here. Listen to all the shows today.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This is TFNN.